Please join fast. Please join fast. Please join fast. First of all, please clarify one thing. Audio, video, both are clear. Another 2 minutes I will wait. Still students are joining. So even first day, they might have some confusion as well. So I'll wait for another 2 minutes. Please join fast. 7 o'clock means let us start by 7 so that we can complete everything on time. So by God's grace, at least this time exams are in November. We have some ample time this time. But still, make the time perfect. 7 o'clock means 7 o'clock. If we start now, it will be very good. And please inform your friends as well that live has started, because some people might know or not, I don't know. Some people are putting a message that said this document was sent at late night, because of that I couldn't take the printout. I will confirm. Okay, I will tell you on that also. I have many things to discuss with you. Once that is over, then we will start with our class. Okay, so the flow of the class, chapters, everything we need to have a clarity before we start with. So first 5-10 minutes I will discuss about it, and then we will be starting. I'll wait for 2 minutes. We'll begin. Please try to join fast. We are not going to do all these once again. I told her first 3 videos already uploaded. You might have completed by that time already. If anyone did not get any response or answer for your call or message, so you can directly put to me. Begin. Everyone, please give a reply. Can we start with the class? Okay. I think day one I have given enough time for you to join. So many people did not even join the live here. Totally around 412 or 413 students have enrolled in that. Only live around 230 something. I don't know whether they don't know how to join live or whether first day means they should not join. I don't know the reason behind what they wanted to tell. Why you paid and why you are not joining? So only live around 230 students or 232 or some count. 200 it crossed yesterday itself. I am now little worried whether they know that the class is started today, whether they don't know. So my request is, if your friends have taken to your knowledge, if you know, please inform them that the class has started. Okay, even I can't wait beyond the time. So anyway, first of all, very good morning everyone. Today we are going to start live session for the CA Final AFM Refreshers batch. As I already said in the the agenda of this particular batch, this is all about doing some unique questions and answers. Okay. This is all about solving some unique questions and answers rather than starting from a small question, moderate question, tough question like that. We are concentrating more on concept oriented questions in such a way. All the contents of our syllabus coverage is our motive. And an example I will tell you. For example, if you see share valuation chapter, last attempt 2 questions came from this segment. Students are leaving it or they are having a small eye on this particular chapter. A, B, C category people try to put this either in B or in C. So to crack our this expectation, institute has given this chapter for 10 marks in the last attempt. So the trend can continue also. See whether exam question will not come, no one will know. But first of all point is, let us not brand anything as ABC. From the very beginning I used to tell this, again I have been repeating. Don't brand anything as ABC. When institute will get a intent or a mood to give a chapter, no one will know. I'm talking about both the institutes, none of them are lesser in that way to torture the students. So ABC category let us not put. I will put on the basis of coverage of chapters, on the basis of marks and on the basis of volume of syllabus. Clear? So listen now. Point number 1. We are going to start first with the share valuation chapter. Okay. Already recently I made one video and I already cleared as to what is the sequence. So once these are completed, the most important chapter I wanted to start it first itself this time, which is Forex. And in Forex, in this refreshers batch, we are going to do 50 questions which are super unique, which cover all the concepts of Forex. Forex basics will be covered, rate analysis will be covered, quotation analysis will be covered, bankers deal will be covered. Okay, in that arbitrages will be covered, interest arbitrage will be covered, triangular arbitrages are getting covered. Good questions taken from all ICA sources. Wherever required, the CFA sources were also touched. CFA sources are touched not for the reason that those questions will come in exam, for the reason that the concept is not yet tested in CA final. Okay, I will show you an example with regard to this material. Don't take the printout of this material today. Today afternoon you will get the full copy of chapter 1 that you take as a printout. That's what is the answer for one person who kept the message in the group. Don't even take this as a printout. Okay, afternoon I will be sending you the final copy. Please take that as a printout. See here. Just have a look here once. Linear growth model, also called as a H model. Linear growth model or H model. In this, I have put 3 questions totally. Study material question are not there. Just they kept that H model will be there, linear growth model will be there. That's all. No problems given on that. So what I have done now, question number 14, if you can see, This is taken from CFA level 2 2023 exam. Question number 15, CFA level 2 2018 question. There it came for 7 marks. Question number 16, this question is our May 26 CA final question paper. Rod paper is there na? And the rod paper, this is the question that came. What is our motive? Do you know? People may throw lot many stones. Why CFA questions are required? First of all, point number 1. People are not damn bloody fools. Okay? If we do all CA questions, super. If we add some sort of other questions also, it will enhance your knowledge. Okay? It is not that those questions will come in examination. That is not our motive. See, I will tell you one point. Let us read the data of question number 16. Okay? XYZ Limited recently paid 40 rupee dividend. Company entering into 5-year transition phase. Current 15% growth rate will decline linearly to a stable perpetual rate. Okay. Financial parameters. The transition happens over 5 years. Current data, ROE, G calculation B into R, they gave B as 20, B as 25, R as 20%. B into R will give you growth rate. That is a known point only. Terminal data, and from 6 to infinity, ROE will be 12, means R is 0.12, B is 0.5, 0.5 into 0.12, okay, will become 0.6, 6%. Market data, required return 13%, KE. Market price, present price 850. This is market price. We have to calculate the fair value, intrinsic value. So estimate the intrinsic value using H model. Okay, H model was introduced by economists called as a Fuller and Shia. These are the two persons who invented this concept. In the name of second person, model name was given, H model. It was there in CFA already. Sorry, this is data given in our exam. This question was nowhere there in any of our RTP, MTP, past papers or from the study material. This is clarity. Because everyone know that this question especially is not there. Theory part they have given, but exactly this question there is no parameters that were can be referred in the previous items. First of all, everyone, are you understanding of what I said? All the students in live? Clear up to here? Please give a response here, or else I can't understand. Feedback is most important. Okay. So now what is the point here? Let me explain one thing. This question came in CA exam. Okay, CA exam, this question came. Two things will happen now. Now next attempt, so two things can happen. Number one, H model may not come again in the next attempt. Next, definitely they will ask. As an institute intention, they will ask one question. If they don't do, they will ask again till they do. So now maybe next attempt it may come, it may not come. I don't know, but we need to learn. Okay, that's number one. The question data. Now I will show you the data given in CFA level 2 2023 exam paper. You are valuing, these are all data given in dollars. The exam is conducted in US, that's why their examinations. So everything will be euro, dollar, like that. It will be that you remove. Okay, it is not forex question. It is pakka share valuation question. You are valuing Siemens AG, Frankfurt. SI is the code for listing. With H model approach, relevant inputs, current dividend, euro 1, there 40 rupees. Current growth rate, here 29.28%, there 15%. Declining linearly over 16-year period, there 5-year period. Their growth will be reduced to 6%, here 7.26. Here KE has to be calculated, RF plus beta into RM minus RF. Using the linear declining model of Fuller and Shia to value the stock. This is the point. Now you please tell me, if we would have done this question previously, you might have done H model also correct in the exam. Yes or no? Everyone? Correct? Huh? Everyone, I'm talking to you. So, what is the intention here? Questions on CFA is done not for the reason that they will come in exam. If there is a concept in our syllabus which is not backed with any question in any of the RTP, MTPs, etc., those areas I will concentrate on CFA questions such that at least one backing will be there for us. Okay, like this question can come. Okay, sir, is a normal question. Another question came in CFA, the super question. See, next attempt, if they have to ask a question, they can test a question in this way. Okay, because already they tested this model, na? They will think that okay, now student will learn about H model, okay, how to do, etc. So now what to do? They will twist the question and they will give like this. Elaine Bouvier, all are these American names, so leave it, is evaluating HRL. And there is one analyst is evaluating the stocks of a company. She wishes to value, Elaine Bouvier is a lady. She wishes to value HRL using a 3-stage dividend model with a linearly declining growth rate in stage 2. After considerable study, Bouvier has decided to use the following information in her valuation at the beginning of 2026. It actually in the exam paper, it is at the beginning of 2027. I changed it to 2026. Current dividend, $0.39. Bouvier estimates required return of HRL stock to be 8.72%. Stage 1, dividend will grow at 11.3. Stage 2, lose and go down for 10 years, it will go down linearly. Stage 3, the equilibrium long-term growth rate will be 5.7. Calculate the value of the stock using H model. It's a super question. Okay, here working also will be bigger one in this question. Okay, so this all we will do, but listen carefully. Wherever CFA questions were introduced, take it with a positive note that we are going to learn something which is not covered by any of our institute materials. Okay, that does not mean we are going to waste our time. But if you would have done this last time, the question also we might have done correctly. Okay, so therefore, take on a positive note as to what we are doing. So this is one thing that I wanted to tell. And up to question number 10, I have already covered in the 3 videos which are already uploaded. So next confirmation I want from all of you is, have you completed the 3 classes I uploaded on YouTube? Everyone. First day, if we have clarity, like second day onwards, smoothness will be there in our learning process. Speed will be there in doing, because I will only give you the entire answer format as well. You need to concentrate only on learning, not on writing and wasting time. Okay, yeah. So with the intention that you already completed the first 3 days of our class, I'm starting with this. Okay, yeah. So let us begin. So this question again, last point before we start. So what are all the sources from which we are going to take now? First preference is given to ICA sources. Second preference is given to CFA. Third preference will be given to some AI modeled questions. I will show you that at the end. Okay, what kirkiri we have done, some tinkering works we have done with the existing question. Okay, we asked the CAGPT to make reasonable changes. They made some changes and gave answers also for that. Sir, I will show you at the end. Okay, so first preference ICA. In this, we are again having 4 different sources: Institute Study Material, RTP, MTP, previous year papers. In that, rank 1 for ISM, because first concept learning will be through ISM. Second, PYP for the pulse of the institute. For the RTP rank 3, futuristic way of asking the questions. MTP last preference because it will be mostly covering first 1, 2 and 3. Nothing great and new will come in mock test generally. 1 or 2 questions can come, but that is also solvable. Okay. So first preference will be for the ISM questions. Second will be for the previous year questions. Third one will be for the RTP and fourth one will be for the MTP. Okay. In the same sequence, I will put in my notes also. Second preference is for the CFA modeled and third one is for the AI modeled questions. Number 2. Okay. As you already know, I said very clearly, this refreshers batch, how it differ from all the other batches. In this particular batch, we are going by concept through question. Concept through question means normally in all our batches what we will do, first we will learn the concept, after that we will do the problem. Here not like that. From the problem we will learn the concept. So speed will be there. And another thing, we are going to concentrate on quality problems only. Means what will not be there? Leveling up concept will not apply. Leveling up means what? First small question, next another practice question, third one moderate question, fourth one difficult question. Like that it will not be. Direct hit a difficult question. Okay. There is no concept of doing small questions after that doing like that we will not. And for example, if we take for example futures chapter we take. Okay. I will not first give you small question on valuation etc. Directly going a index hedging. Okay. Through that we will learn the concept, which we won't do for any of our previous batches. So refreshers bachelor mainly concept through question. And next thing, our intention is on workout. Means 300 questions is our target. All quality questions, 300 questions we are going to solve. Whenever a chapter is completed, May 26 paper, the chapter question we will take and we will do. With no exaggeration, I will tell you, examination pressure you might have felt that question paper is extremely difficult over the last 40 years. But after our discussion in the class, I will make you do that question. At least 80% of the paper you will do right. Then you will regret why you do not do in exam hall. Then we will understand the mindset difference. Okay. Let me complete. No exaggeration. H model is there now we will do. After that you will do the H model given in the May 26 paper. Then you will only understand. This concept I missed or this concept I don't know. Like that we will only understand. Clear? So that's the point here. So workout is our intention. So concept through question concept and quality problems only will be taken. No leveling up the concept. And workout is our main motive, 300 questions. And fourth one, feedback. Feedback is our motive. Means we are going to have tests at regular intervals for me to know your standard as to how you are doing it. Okay? As to how you are doing it, we will be having a consistent test. Okay. When I say consistent test, I mean to say we are going to take it seriously. Whether student will take it seriously and write or not, I don't know. But I am here to put the examination quality questions. So 4 questions or 5 questions for each chapter. Once it is completed, and I will make you do that. The test we have to write such that without a guidance of a mentor or a faculty, something like that, how you are able to do, you will understand. Okay. So that will be taken up for consideration, a feedback. Tests at regular intervals means what? Whenever share valuation chapter is completed, the very next moment, 1 day gap after, we will have a test on share valuation. Some unique questions, maybe some repeated questions, some non-repeated, some new questions, like that we will coin it, we will give in the test. You will be able to solve it. Clear everyone? Worst case scenario questions we will try to give there. Okay, well? So this is the point here. So I think we are now good to start with. Let us begin. See, this is a question taken from May 26 paper. Okay, good question. Previously we understood that capital budgeting questions, project analysis, if it is coupled along with the share valuation, how they look like. We have already done 2 questions. Question number 9, question number 10. Reply from all of you. Do you understand how capital budgeting questions can be merged with the share valuation? 2 new questions we added and we kept it. Everyone, have you understood that? Ninth and 10th question. Okay. Yeah. Next. Question number 11. Already you might have done this question, but practice, we have to do this question. Very good question given in the exam. 8 marks. SAM Limited has just paid a dividend of rupees 2 per share. Just paid dividend. Just paid dividend means what? Already it is paid. Therefore, we call it D0 of rupees 2 per share. And it is expected to grow at 6% per annum. Okay. After paying the dividend, under 2 rupee dividend after paying it, the board declared to take up a project, again project analysis, by retaining the next 3 years dividend. And if the project is to be taken, it will not pay any dividend in the next 3 years. It will retain and invest in the project. This is called as a residual dividend policy. It is expected that this project is of same risk as of the existing project. Why this statement was made? KE is same. And just because of the new project, KE won't change. KE will be same. Okay. Okay. Now I will ask a question. In this, what new plea they can ask in the next coming exam? Okay. How we can tell that? This is how they can change and ask in examination on this KE by using portfolio management chapter. And if they really wanted to twist the paper, now, do you know how they can ask that KE? Let me tell you. Just a minute. There is one concept in portfolio chapter. Name is levered, unlevered beta. Levered and unlevered beta. In that levered, unlevered beta, our company is already there over a long period. But our company is not into a new business. Okay. Now it is entering into the new business. Existing beta I cannot use because the business itself is different. Beta will be dependent on, the beta of a stock is dependent. The equity beta will be dependent on 2 things. Business risk and finance risk. Which risk here? Business risk and finance risk. 2 types of risk will be there. Business risk will come from the nature of business. Finance risk will come from the capital structure you employ. Okay, wow. So, what they can twist in the exam, you will prepare for this and go to the exam hall. How they can twist the question, na? They will tell, company is going to take up a new project, na? That new project KE and the existing company's KE is not same because the new project is into a dissimilar business. Dissimilar business and not a similar business. Therefore, what will happen? You need to first calculate the beta of that stock. Using beta, they will give RF, RM and RM minus RF. You need to calculate KE. That should be used for the new project analysis. Like this, they can frame a question. Do you understand what I said, everyone? Reply. I'm talking to you all. So like that, they can change the pattern of the question. So you should be ready for that. Okay. So learn completely. Obviously, you can link and you can do. So let us do this question as it is as of now. Okay. See. First point number 1. Sam Limited just paid a dividend of 2 rupee. It is expected to grow at 6%. After paying the dividend, board declared to take up a project by returning the next 3 years dividend. It is expected that this project is of the same risk as the existing project. Because of that one single line, our life is very happy in this question. The results of this project will start coming from 4th year onwards from now. The dividends will then be 2.5 per share and will grow at 7% per annum at till perpetuity. This is the first part. Project analysis is completed with this. Now, how that project is affecting the wealth of investor is the second part. An investor has 1,000 shares in SAM Limited and wants a receipt of at least rupees 2,000 per annum from his investment. Show that the market value of the share is affected by the decision. Which decision? Project. Which project? Capital budgeting project. So we are going to analyze the share price through the capital budgeting project. So because of a project, will the share price get affected? Yes, it will be. How it will be, we are going to show. Show that the market value of the share is affected by the decision of the board. Also show as to how investor can maintain his target receipt from the investment for the first 3 years and improved income thereafter, given the cost of capital is 8%. This 8% they have given in the question, and they said this will continue even for the new project. They can twist on this particular point in the next attempts to come. So get ready for that. Can we start before that? I will give 1 minute time, max 1 to 2 minutes time I will give. Read the question. Again, we are not doing any Olympics here. First person to do the answer will get an Olympic medal. We are not going to give any medals now. Your concentration should be on reading the question, understanding it and doing it. Clear? Wherever there is an alternative method of asking the question, we will write there itself, such that your mind will be ready for the unexpected things. Read the question. 1 minute to 2 minutes time. Please read the question first, please. And again I am requesting. We are on a live class, not on face to face. I don't know what you will be doing on the other side. But my request, when I ask you to read the question, only read it. Okay. If you complete in a sleep, but please don't do in a uniform pattern when we are all doing together. Then only that wavelength will be matched. You will also feel comfortable in the class. Read the question. When I say, let us begin together, all of us will do. Now you can tell. Can we begin? Can we begin, everyone? Okay. Let us start. See here. SAM Limited has just paid a dividend of rupees 2 per share and it is expected to grow at 6% per annum. So, just paid dividend means always a D0. D0 is 2 per share. Expected to grow at 6% per annum. After paying the dividend, already 2 rupees was paid now. Board declared to take up a project by retaining the next 3 years dividend. It is expected that this project will have the same risk. The results of the project will start coming from 4th year onwards. Dividend will then be 2.5. Will grow at 7% per annum. An investor has 1,000 shares in this is the first part. First, what is the company share value, wealth of the shareholders if the project is not taken up? If the project is not taken up. See, if the project is taken, next 3 years dividend I will stop. Fourth year I will pay 2.5. Thereafter perpetuity 7% it will grow. When all this will happen? If I take the project. If I do not take up the project, 2 rupee will be added by another 6%. Next year another 6%. Next year another 6%. Like that till perpetuity. So if the project is not undertaken, write down there. P naught equal to D1 by Ke minus G. D0 into 1 plus G divided by Ke minus G. D0 is rupees 2. Growth is 1.06 whole divided by calculate 2 into 1.06 divided by 2%. Rupees 106 is the price of the share. Everyone, have you completed? Up to here, clarity, yeah? Okay. Now second part. What he is asking, SAM Limited justified a dividend of 2 per share expected to grow at 6%. Now listen carefully. Board declared to take up the project by retaining the next 3-year dividend. Board declared to take up a project by retaining next 3 years dividend. The next 3 years, whatever the dividend will come, that will be retained and invested in the project. So therefore, next 1 year after, no dividend. Second year, no dividend. Third year, no dividend. Fourth year, for the first time, it will pay 2.5 per share. 2.5 per share. Okay. 2.5 per share. And very, very important adjustment here is, see, how to understand this question? There is an investor. That investor wanted to hold a stock for SAM Limited stock for 4 years. There is an investor. That investor wanted to hold SAM Limited stock for 4 years. First year, no dividend. Second year, no dividend. Third year, no dividend. Fourth year, they will pay 2.5. I will take the dividend and I will sell. I will sell it which year? P4 I will sell. Fourth year end I will sell. If you sell the share in the fourth year, what you are going to lose? I am going to lose my dividends from D5 to D infinity. With what rate it will grow? It grows at 6. How much percent? 7%. It will grow at 7. Those dividends I am losing. Whatever you are losing will be asked as a compensation. Do you remember this discussion already made in the first 3 videos or not? Everyone. We already discussed about this point. Okay. So how to value any asset? Value of any asset is whatever the cash flows you are not going to get. Okay. Those you will ask as a compensation today itself. Clear? Huh? So same logic. We wanted to calculate P4. Write down P4 equal to D5 divided by Ke minus G. D5 will be written as D4 into 1 plus G divided by Ke minus G. D4 2.5. Growth 1.07 divided by 8% minus 7%. So 2.5 into 1.07 divided by 1%. Rupees 267.5. Multiply now. 2.5 into 0.735. 1.84. 267.5 into 0.681. Sorry. Here fourth year also 0.735. Just a printing mistake. I will rectify now in the afternoon and I will resend. I will remember this mistake. So 2.5 into 0.735. Next, 267.5 into 0.735. Totally we got 198.45. Some 196.61 like that I got. So 198.45. Everyone got the answer up to here clearly, yeah? 198.45. Everyone up to here, everyone got the answer 198.45. Okay. Okay. Let us now move on to the second part. So first we have computed that share price after taking the project and before taking the project. Now let us see. Project, if it is not taken, our share price will be at 106 and the wealth of the shareholder will be at 106. If the project is taken, wealth of the shareholder is 198.45. And because of taking up this project, is company wealth is the company wealth increasing? Yes, definitely there is a significant increase in the value. So show how the market value of the share is affected by the decision of the board. Yes, market value will be affected positively because of decision of the board. This is one answer. Now see, an investor, now let us go to the investor point of view angle. An investor has 1000 shares in SAM Limited. Okay, I am an investor. Let us, we be from the position of investor and see the picture. We are investors. We are holding 1000 shares of SAM Limited. Okay. So, and wants a receipt of at least 2000 per annum from the investment. So we want 2000 from our investment. Okay. Show how the market value of the share is affected by the decision of the board. Also show as to how investor can maintain his target receipt from the investment for the first 3 years and improved income thereafter. Cost of capital 8%. This is data given. How to understand this point? Listen. I am an investor. I invested in the stocks of SAM Limited. See, roughly I am doing. I am an investor. Invested in 1000 shares of SAM Limited. SAM Limited situation, let us see. Year 1, 2, 3, 4. First year, no dividend. Second year, no dividend. Third year, no dividend. Fourth year, 2.5 dividend. First point over. Okay, one thing I can tell with the super clarity. Fourth year, I am already having 1000 shares. I am already having how many shares? 1000 shares. Forget about all other things. 1000 into 2.5, 2500. I want 2000. I am getting 2500. So fourth year, my condition is satisfied. Everybody reply. Everybody answer. Understood this point? I am holding 1000 shares. 2.5 will get at the end of fourth year. So definitely I will get 2500. 2500 is more than my expected return of 2000 rupees. So fourth year it will be satisfied. Undoubtedly. Okay, problem not there. First 3 years ke problem. See here. What is the receipt given by company? No receipt. But what is the receipt expected? 2000, 2000, 2000 and 2000 minimum. Okay. Forget about fourth year. Talk about first 3 years. First 3 years, like company is paying dividend or not paying dividend? Not paying dividend. Oh, okay. So company will not give any receipt. But I want a receipt of 2000. One thing we have to understand first. Mind, some clarity should be there in the question. They said one hint. Project, if project is taken, market value of the share will increase or will not increase? Will increase. Correct? Market value will increase. When market value increases, I can get a return in 2 ways. See, whenever we say price of a share, I can write this as D1 plus P1 divided by 1 plus KE. D1 plus P1 divided by 1 plus KE. No, sir, I will write like this. P0 equal to D1 by KE minus G. D1 by KE minus G. This is correct. This is also correct. This is a perpetual dividend model. This is a 1 year valuation model. Which model? 1 year valuation model. I will discuss about all. Clarity of thought process is required. I know. We will discuss about all. This you know already. Whenever there is a growth running till perpetuity at a constant rate, this will be used. But when this formula has to be used, we are going to understand in the today's class. Clarity. But listen carefully. A shareholder investing in the share will get a return from the share in two ways. Cash flow number one, it will come from dividends, D1. Cash flow number two, it will come from P1, the price of the share at which you are going to sell it. P1 is the selling price. D1 is the buying price. Just a minute here. So P1 is the selling price. P0 is the buying price. So you can get returns in two ways. So shares will give return in two ways. One, D1. Another one is P1 minus P0. Another one is P1 minus P0. Company is not paying any dividend in the next 3 years. So what is the only way of getting the return? Sell. Sell. Through sale you need to get the return. Are you understanding? And what is the motive of this question? A investor wanted to get a return of 2000, guaranteed return of 2000 per annum, even for the next 3 years. Next 3 years, if company pay dividend, very good. You will get the 2000 through dividend. But company is not paying any dividend. Company not paying any dividend, cash, there are two cash flows in a share. Dividend, capital appreciation. When dividend option is closed, the only option available is what? Capital appreciation. When you will get capital appreciation? When you sell it. So therefore sell the share. Okay, well? So, but the problem is, I have to sell a share not today. Question they clearly asked. An investor has 1,000 shares in SAM Limited. Wants a receipt of at least and a minimum 2,000 per annum from his investment. Show how the market value of the share is affected by decision of the board. Also show how the investor can maintain his target receipt from investment from the first 3 years. So let us concentrate on first 3 years. See, we need to compute P1, P2, P3. P1, P2, P3. We need to calculate these three. Why? I have to sell after 1 year, after 2 years, after 3 years. After 1 year, after 2 years, after 3 years. Okay. First listen, here I will write and I will show you. There is a formula. P0 equal to D1 plus P1 divided by 1 plus KE. When this formula has to be used, if you wanted to calculate yearly return, if you have to calculate using yearly return, you need to use this model. Sir, I did not understand. What is this yearly model? Listen, I will buy today. I will sell after 1 year. Again, I will purchase. Again, I will buy today. Again, I will buy after 1 year. Again, I will sell. This is called as a single period holding formula. Single period holding means if you are holding for 1 period. Okay. So what is the value of any asset? Value of any asset is present value of future cash flows discounted at a required rate. Present value of future cash flows discounted required rate. See, future cash flow 1, future cash flow 2, dividing, you are discounting by required return called as KE. What is the value of any asset? Present value of any asset is present value of future cash flows discounted at required rate of return. This is the value of an asset. Okay. So it is nothing but value of asset. This is a what is empirically we proved that yes, value of an asset will be dependent on future cash flows discounted required rate. Sorry. Actually, this formula is taken like this. KE equal to D1 plus P1 minus P0 whole divided by P0 into 100. Whole divided by P0 into 100. KE means what? It is a return on equity share. There, the return on equity share is made up of two factors. Factor 1, D1 by P0. Factor 2, P1 minus P0 whole divided by P0. P1 minus P0 whole divided by P0. D1 by P0, we call it as dividend yield. P1 minus P0 we call as capital yield. SAM Limited dividend yield will not be there for next 3 years. Therefore, the only chance available is capital yield. Means you have to buy and you need to sell after 1 year. That's a model. So now question. If I want P0, it depends on D1 plus P1 divided by 1 plus KE. But I want P1. I want what? P1. So how to compute? Listen carefully. I will explain. I will explain and I will do. Please take a reasonable time to understand. Okay. See. Today's share price, I already know that it is 198.45. 198.45. D1, I don't know. Plus, sorry, not I don't know. D1 is 0. P1, I don't know. Whole divided by 1 plus KE. KE is taken at how much percent here? 8%. 1.08. So P1 equal to 198.45 into 1.08 rupees 214.33. Next, this is P1 computation. Now I wanted to do P2 computation. Okay, let us do here directly now. P1, how to compute? Write down. P0 equal to D1 plus P1 divided by 1 plus K. D1, P0 already we know. 198.45. D1, 0. P1, we don't know. K, 1.08. P1 equal to 214.33. Just now I calculated and just copying down. Next, P2. P1 equal to D2 plus P2 divided by 1 plus K. P1 we already know. 214.33 equal to D2 again 0. P2 we don't know. 1.08. So P2 equal to 214.33 into 1.08 gives rise to rupees 231.48. Rupees 231.48. Everyone have your computer up to here clearly? Yeah. Rupees 231.48 or 48 or 47, whatever the case may be. Next, P3. P2 equal to D3 plus P3 divided by 1 plus K. P2 231.48 equal to 0, it will not pay anything. P3 we don't know. 1.08. Finally P3 will be 231.48 into 1.08, which boils to rupees 250. First of all, I want a reply from all the students here. Please give a reply in live. Did you all understand the computation? If you have any doubts, I will wait for 1 minute. You can ask the doubts also. Please. If you have doubt in doing the problem, or if you have a doubt why you use the formula, if you have a doubt in the formula, any question you are free to ask. Please ask the questions if you have. I will wait for a minute. Okay. Yeah. So one or two doubts are there. Those two doubts I will clarify and then we will be moving on, because two students have asked two different doubts. Whether big or small, whether you know that or not, I have to first clarify that doubt. Then we will move on. Question number 1, doubt 1. One student asked a doubt like this in the chat box. You can see there. Okay. Doubt that they have got is when to use this formula. Okay. When to use this formula. Sir, I don't know how to use this formula, sir. Then how do I know when exactly we need to use this formula? This formula will be used when you have to calculate return on yearly basis, or you want a price on yearly basis, or calculation not on perpetual basis. Okay, I don't want with a perpetual growth. I just want return as a realized yield. Means what? If I buy today, if I get dividend after 1 year, and if I sell after 1 year, what will be my return? That's all. I wanted to know about that. I don't want to hold it for perpetual period. My holding period is only 1 year. In that case, this will be useful. Okay. In our question, what they have done, you have to sell it P1, P2, P3. Means what? I want to hold for 1 year. Then what is the price? I want to hold it for 1 more year. For that extra 1 year, what is the price? I want to hold it for next 1 year. For that 1 year, what is the price? I wanted to know. That's why in this model we used it. Understood? This is one way of doing the answer. See, I will give you one conceptual discussion, and this is how institute also have done the answer. Means they used P naught equal to D1 plus P1 whole divided by 1 plus K, and they have done. Now doubt will come to the student. Sir, okay. Now we have done this question in the class. We know that if this question comes, we need to use this formula. In examination, how it will strike to us? That's the reason why in my book I kept one question. That is question number 8. Now I will ask all the students, did you find any kind of comparison between question 8 and this question? Oh, one student already kept that message. Kalaivani, super, super. You listen to the class properly, undoubtedly. Take it. You are rewarded. So, question 8 we have already done. Na? This question was taken from a CFA level 2. That's why I am telling you, see, when we are doing questions on CFA level 2 or level 1 or level 3 questions, we need not keep here because that is outside the portions. Derivatives, I will show you how the questions are being tested. Latest, I went to California also to write the exam. I will show how the question papers are coming for level 3, how torturous they will be. So anyway, let's come back to our main discussion. See, in this question number 8, we have done in one way. Similar question is given in examination. Yeah, old CFA question, 2004 or 2005 question. 2016-17 time, the institute has tested this question on a similar grounds. And the institute will be watching all types of questions in all international exams. Reason I will tell you. ICA is not a body for finance. It's a body on accountancy. Finance means it has to take some reference books. Reference books, there are around 8 to 9 very much renowned books called as a Hull for derivatives, Bailey Mayers for swaps and other interest rate related things, Drury for share valuation techniques, Graham and Dodd for share valuation. Like that, CFA reference books are there. Through that reference books, they will read. See, one thing is clear. Institute is not a body to frame questions on finance because none of the models were made in India. Graham and Dodd is not Indian. Walter is not Indian. Gordon is not Indian. Modigliani Miller is not Narendra Modi. Okay, that is different Modigliani Miller. Different person altogether. Sharp is not Indian. Tobin is not Indian. Okay, Filler is not Indian. Shia is not Indian. None of the persons who touch the finance and modeled anything, they are not Indians. And none of the models were made in India. Then how come an institute in India will frame questions on finance? It is not possible. Okay, one thing is clear. They will have some source and reference books. What are those reference books? I may not know. But one thing is clear. Worldwide reference, there is one institute called as CFA for all the finance related things. Definitely that can be a chance again. Okay, there is a chance that there can be a reference now. So there will be a reference, or some references should be there for anyone to frame a question. Clear? So now people are asking doubt. Na? Let me clarify that in 5 minutes and we'll go into the next one. See, doubt that they will get is, sir, exam how I will get a thought that this formula has to be used exactly. Okay. See, that's why I'm telling you, go by concept when you don't know how to do. See, what he said, please, everyone, listen. there is a investor. This investor enters into market today. He will stay in the market for 3 years. 4 years. Fourth year he will sell. First 3 years, first 3 years, dividend is 0, dividend is 0, dividend is 0. Okay. When dividend is 0, we have to get a return of 2000. The only way is what? To sell. And I want what? P1, P2, P3. P1, P2 and P3. Okay. Now, listen carefully, please, everyone. Okay, listen carefully. If I invest today, I will write like, if I invest today, I will get D1, D2, D3, D4, and then I will sell the share. Okay. If I purchase the share at the end of first year, I will get D2, D3, D4, and then I will sell. If you invest not in the first year, not in the second year, not today, not in the first year, but you invest in the second year, you will get D3, D4, and you will sell. No, sir, I will not invest today. I will not invest after 1 year. I will not invest after 2 years. I will invest after 3 years. You will get only one cash flow, and then you will sell. Sorry. Now listen carefully to the discussion. How to solve this question? See, there is a shareholder. This shareholder wanted to hold it for 4 years, but you want a guaranteed return of 2000 every year. There is no option of dividend. So the only option is to sell. Sell at what price? You have to sell at P1, P2, P3. You have to sell at P1, P2 and P3. Now listen carefully. See, if I have to sell at the end of year 1, P1 will be dependent on D0, D1, D2, D2 to D infinity it will be dependent on. Correct? So, how to understand? Year, cash flow, PV at the rate of 8%, roughly I am doing PVCF. If I wanted to sell at the end of year 1, I will get D2 in the year 1. I will get D3 in the year 2. I will get D4 in the year 3. Okay, I will get D4 in the year 3. And I have to sell at P4. Okay, you should understand again. Listen carefully. I am not purchasing share. I am not selling the share today. I wanted to sell the share after 1 year. After 1 year, what is the life of the stock? 2, 3, 4 and perpetuity. Same thing. 2, 3, 4 perpetuity. So you will not get any dividend today. After 1 year, you will not get any dividend here. You will be getting a 2.5 dividend and you will sell it to 267 point. What is the price here? You have done something. 267.5. 267.5. So take it. What is the 8% rate? 0.794. Next also 0.794. Total it and get the answer. 2.5 into 0.794. 267.5 into 0.794. 214.38 we got an answer. What is this? This is the P1. Exactly. We got the same answer also in this way. Game over. Do you understand how to do, everyone? Hey, answer, yeah, everyone. Do you understand the alternative method of doing the same answer? If you do not remember that, at least you do like this. That is the reason, since we have to do this question, previously I made you ready through question number 8. YCFA question you are doing. Waste of time. Hey, first point number one, your time is precious, you are having exams. I also don't have that much of time, I have many batches pending. So when I am putting a question, there is a need for that, then only we will have in the material. Okay na, workbook, if I keep something, definitely there is a need. So one thing is clear, you can calculate the price in two ways. One through formula you did not remember now, at least go by concept. What is the logic? I have to sell at P1, P2, P3, and I want P1. P1 will be dependent on what? D2, D3, D4 and infinity. P2 will be dependent on D3, D4 infinity. P3 will be dependent on D4 and infinity. That's it. Okay. So this is the point that I wanted to convey. This is how alternatively we can do, but still not yet completed. Listen. What he said, we have to sell the shares to get the 2000 rupee guaranteed return. Okay. See. Year 1, year 2, year 3. What is my targeted income? 2000. Minimum. 2000. 2000. What is the market price? 214.33, 231.48, 250. How many shares I have to sell at 214.33 at the end of year 1 to get the 2000? 2000 divided by 214.33. 9.33 rounded to 10. 2000 divided by 231.48, 8.64 rounded to 9. 2000 divided by 250, 8 shares I have to sell. So P1 ending la, you have to sell 10 shares at 214 such that you will get 2143. Minimum you want to get 2000. You got more than minimum na. So this is the first case. 9 into 231.48, you will get more than 2000. You got minimum 2000 now. So last exactly 2000 you have received. Now what is the next bit they asked? See, also show as to how investor can maintain his target receipt for first 3 years is shown now, and improved income thereafter. Now what happened? Number of shares at the end of 3 years. I started with 1000 shares. Okay. First year I sold 10 shares. Next year I sold 9 shares. Next year I sold 8 shares. So 1000 minus 10 minus 9 minus 8, 973 shares I am having. Dividend from 4th year onwards, how much dividend they will pay? 2.5. So 973 into 2.5. Okay, 4th year onwards 2.5. Minimum guaranteed return. 973 into 2.5. We got 2432.5. 2432.5. Since investor expect a minimum guaranteed return of rupees 2000 per annum, and here he is receiving 2432.5, it is clear that he achieved his target return. That's it. Yeah, 8 marks question, worth learning all the time. This is one of the best questions I have seen in share valuation chapter, because they merge project analysis, share valuation and investor analysis all in one question. If you have to do this question, you have to do. First of all, everyone give a reply. Do you all understand clearly? Yeah, everyone please reply. Have you all understood clearly? Comfortable with this question? Can we move on to the next one? Okay, next. Mark this question as super important. 8 marks question, May 2012 paper. As I said, I'm taking all old RTP, MTP, past exam questions also. Okay, there only we are doing wrong. Yeah, we are doing only last 10 attempts questions in question banks. They are not asking those. They are asking very old. Okay. Let us see. Sir, copying everything you can do after class also, because this notes will be shared with you. Na? You can copy there for practice. First look at here. Let me go to the new question. DEF Limited has been, hey, listen carefully everyone please. Important question. When I said na important. See, in this refresher course, important, unimportant, you need not even ask me. It is important, that's all. Or else I'll refresh the batch, I don't put the question. So if it is there, it's a golden question. Some concept we are going to learn through that. Okay. Forex, when we start now, you will see what we are going to do this time. How many models we are going to do, how many angles we have to see the Forex chapter, we will see this time. Okay. Make my words, take my challenge. Okay. Even in my material, I'm talking about for EOB batch, for regular also, I'm going to add Forex. Slotted I'm going to add, because this time Forex we are going to do very big. All new questions. Means unique questions, new questions, concept questions, everything we are going to put in the material. 50 questions, 50 concepts we are going to learn. Okay. Let us begin. DEF Limited has been regularly paying a dividend of rupees 19,20,000 per annum for several years. It is expected that same dividend will continue at this level in the near future. There are 12 lakh equity shares of rupees 10 each. Share is traded at par. Company has an opportunity to invest rupees 8 lakhs in year one time, as well as further 8 lakh in 2 years time in a project, and is estimated that project will generate a cash inflow of 3 lakh 60 in 3 years, which will continue forever. The investment is possible if the dividend is reduced for the next 2 years. Whether company should accept the project. Super questions here, all these are project analysis, a capital budgeting they wanted to link with share valuation. So this investment is possible if the dividend is reduced for the next 2 years. Whether company should accept the project. And in all these 4 or 5 questions we have done, analysis on project, whether to accept or not to accept, is not on the basis of project cash flows, on the basis of the wealth of the shareholders. Next, also analyze the effect on market price of the share if the company decides to accept the project. Super question. Read the question. 8 marks question here. Problem answer is very small. The thought process they gave that 8 marks. Start reading the question. First of all, everyone tell me, have you read the question? Read, everyone? Reply, yeah, everyone. Why you are silent? Okay. Now, see the question first. DEF Limited has been regularly paying the dividend, okay, of 19 lakh 20,000 per annum for several years, and over a period they are paying. First significance of that word several years. Do you know what is it? There is no growth. Several years you are paying 19 lakh 20 means there is no growth in your company. You should not pay for several years. Na? There should be a growth. 19 lakh 20,000 over a period I am paying me, there is no growth in the company. G is 0. So that much analysis you need to do while reading the question. In this question, growth is 0. Why? Several years I am paying only 19 lakh 20,000. Now, how the growth will come? Number one. Okay. First of all, how many of you genuinely, honestly tell me, got this idea? They only reply. Okay. Who do not get this thought process, also keep a message no. I will understand how many of you are reading the question and how many of you are feeling it difficult to read the question. I will know the pulse of the students. Okay. See, no or yes, you should be very happy. At least you are going to learn now. Okay. So even if it is no, now please be very, very happy for that. At least you are learning now. Whenever they use the word several years I am paying the same dividend, it means growth is 0. This is the first point. Okay. Next, what is asking us to value? Share price. Okay. What is asking us to value? A share price. Okay. What is the price of a share? Present value of future cash flow discounted required rate. Okay. Present value we have to calculate. Future cash flow they have given in the question. Discounted required rate. Where is the required rate? KE is missing in the question. How many of you have observed this? That KE is missing. How many of you have observed that KE is missing? So in this question, the uniqueness is a missing part is the KE. Discounting factor missing. Okay. Like that, small observations make a big answer. Okay. First, let us do the KE computation. Everyone, let us do together. When I say let us do together, you can write along with me. So this document anyway I will share you now. There you can practice. Okay. So first, step 1, calculation of KE. Calculation of what? KE. First, before doing that, note, since company is paying rupees 19 lakh 20,000 dividend, over several years, it is clear that G is 0. G is 0. We want DPS. Dividend how much? 19 lakh 20,000. They have given in the question that 12 lakh shares are there. 19 lakh 20,000 divided by 12 lakh. Rupees 1.6. 1.6. Okay. And if you observe, equity shares of rupees 10 each and the share is traded at par. Means market price per share today P0 is 10 rupee. KE equal to P0 plus G. Anyway, G is not there. When G is not there, D0, D1, D2, D3, everything will be same, several years. So what is the revised formula? D by P. D by P. That equal to rupees 1.6 divided by rupees 10. 1.6 divided by 10, 16% is the answer. First of all, everyone, please give a reply. Up to KE computation, everyone, are you feeling comfortable? Everyone, did you understand? Okay, now, okay, very good. Next question for you. Read the remaining part of the question for a minute. After starting doing the answer, there should not be a second doubt. Read the question. Okay, read the question, everyone. Have you read the question, everyone? Okay, yeah. See here. What is the point they are asking in this question? See, there are 12 lakh equity shares of 10 rupees each traded at par. From here, discussion will really becomes more complicated. Company has an opportunity to invest rupees 8 lakh in 1 year time, as well as further rupees 8 lakh in 2 years time in a project, and is estimated that project will generate an inflow of 3,60,000 per annum in 3 years time, which will continue forever. This investment is possible if dividend is reduced for the next 2 years. Whether the company should accept the project. Also analyze the effect on the market price of the share if company decides to accept the project. This is the question they have asked. Okay. Now listen carefully. In this company, the new project that they are going to take, okay, the new project that they are going to take up now, this new project is having a life of perpetual project. Answer. Please participate fast, everyone standing on live. You should answer. It is a time-bound project or a perpetual project? Is there any life of the project or perpetual? Okay. So, pakka it is a perpetual project. How do I know? See, 3,60,000 in 3 years time, which will continue forever. Which will continue forever. See, in this company, already there are some existing projects, ongoing projects. Ongoing projects are there. Because of that reason only, dividend is paid. All projects are not there. This is the only project, means how come you got 19 lakh or 20,000 dividend? How come you made earnings? And in the company, there are two types of project. Okay, project one. existing ongoing project to the new project that you are going to take up. Okay. Now listen carefully. What he is asking, he is not asking you to calculate the market price. He is asking you to calculate the effect on market price. Observation number 1. This observation I wanted to know how many of you have understood. And he is not asking us to compute market price. He is asking us to compute the effect on market price. How many of you observed that? Honestly. Don't just tell yes for yes sake. So he did not ask the question to compute market price. Market price computation they are not asking. They are asking you to compute the effect on market price. Means how market price is going to get affected. Positive or negative, he is asking. Okay. Now listen carefully. Not yet done. See. Company already has 19,20,000 rupee earning. Okay. 19,20,000 rupee earning. And how to understand? 19,20,000 divided by 12 lakh, we have already done 1 rupee 60 paisa. Already company has earnings, which will be paid as dividend. This new project will add to that 1.6. Are you understanding? This new project is going to add to that 1.6. And already 1.6 is there. This 1.6 plus this will also get added. Are you understanding the point clearly? Yeah. So this also will get added, but mark my words clearly. 8 lakh rupees in 1 year time is a investment outflow. 8 lakh rupees in 2 years time is a investment. Again, it's an outflow. 3,60,000 per annum in 3 years time, which will continue forever, is the income that I get from the 3rd year onwards. Okay. 3rd year onwards I will get. Same like the previous question. Previous question of what we have done. Year 1, 0. Year 2, 0. Year 3. Year 1, 0. Year 2, 0. Year 3, I will get 2.5. Thereafter continue forever. Same thing. 3,60,000 divided by 12. 3,60,000 divided by 12 lakh. Not 12. 12 lakh. 0.3. How much? 0.3 means 0.3 I will receive at the end of 3rd year, and that will continue forever from the end of 3rd year. And how to understand? There is an investor. Investor wanted to hold the share for 3 years. He will not get any dividend for the first year. He will not get any dividend for the 2nd year. He will be getting one time first dividend of 0.3 in the 3rd year, and he will sell the share. Hey, are you understanding everyone? Complete discussion everyone. So listen here. It's a unique problem altogether. Working I will show you. See here. First year is a outflow. 2nd year outflow. 3rd year inflow. You will sell the share, that is also an inflow. Okay. Listen, how much I need to invest? I need to invest 8 lakhs in 1 year time. 8 lakh divided by 12 lakh shares. Okay. 8 lakh divided by 12 lakh. I have minus 0.667 in the first year as a investment outflow. Next, 2nd year, 8 lakhs divided by 12 lakhs. Again, negative 0.667. 3rd year, I will be getting 3.6 lakh divided by 12 lakh. Positive cash flow 0.3. After that, I will sell my share. At what value? P3. At what value? P3. P3 equal to D4 divided by KE minus G. Okay, D4 divided by KE minus G. Growth anyway not there in this question. So P3 equal to D4 divided by KE. D4 divided by KE. D4, D3, D2, everything is same. How much incremental value you are going to create? 0.3 divided by what is the KE? 16%. 0.3 divided by 16%. 1.875. 1.875. What is this? This is incremental value. Why I am calling it incremental? Already company is having a project, already company is having a earning of 1.6 per share. Along with that 1.6, I am adding this to you. Okay. So now 0.862 into 0.667 negative. Keep in mind 0.575. 0.667 into 0.743 negative 0.496. Next 0.3 into 0.641. This is a positive cash flow. 0.192. 1.875 is a perpetual value. Incrementally it is going to add 1.202. So 1.202 plus 0.192 minus 0.496 minus 0.575. How much is the additional incremental NPV? 0.323. MPS without the project 10 rupees. Add value addition to new project. .32. MPS with the project 10.32. Since market value is positively affected due to the project, it is recommended to accept the project. It is recommended to accept the project. It is recommended to accept the project. So company already have existing earning. Company already have existing earning. New project, how much incremental market value it has brought, we have seen. Okay. Previous question we have done, if you remember, one very big question we have done. In this question, the difference between this question and that question, in this question, the new project life is only for 5 years. Okay. Technically, outflow, inflow. That's it. It will close. Therefore, we did in a different way. You can go back and see the answer for that question. Okay. But in this question, why we have chosen this way of model of doing the answer? Here, the point is, this is also a perpetual project like that of the previous one. Therefore, we have directly calculated. Alternative also is there for this question. You can do that way. Okay. But this is the easiest way and institute way of doing the answer. Institute has done like this, and I also like this model of doing the answer this way. Okay. First of all, everyone respond. Understood, everyone? Everyone, please give a response. Understood? Okay, super. So now what we have completed? Now we have completed question number 12 as well. Okay, Question number 12 also is completed. Next one. Question number 13 is your homework question. Okay, is your homework question. Means what? You will do and come. Again, I will do in the class in the tomorrow session. Okay, so this was tested in November 1999 and again tested in 2017 November in a modified form. Okay, I will not help you in any form. I will not help you in any form. You will only try. Tomorrow, first 10-15 minutes, we will discuss about this question only. That's why I did not give the format also. If I give format, you will know the answer. If I give the format, you will know the answer. Okay, these points I need to compute. That chance also I don't want. So that's why I did not give any format below this question. Okay. Now you need to spend time. You need to understand significance of this question. You need to do. Will you, everyone? Okay, well? So you try doing it. Okay, then you will understand the pain in doing new questions also. So if there are any questions, I will answer now. In that question, why the statement investment is possible only if dividend is reduced for 2 years? Because company is following a dividend policy, a residual dividend policy. It has no new debt, new public issue of equity. The only way of financing their investments is stop the dividend to be paid. Use the earnings on investments. Okay. Okay. So I will be waiting for your answers in the tomorrow's class. Okay, tomorrow's class we will be doing this particular answer. Okay. Next. Now comes the main one. Okay. H model. Okay, which model? Yeah, H model. Explanation I will give in the today's class. Problem solving we will do in the next class, because some people are messaging, sir, we could not attend live today. Okay, please don't teach more. Sir, no problem. I will explain H concept, but just because of that reason, I can't stop my sessions. Maximum 20 minutes before I can leave. 9:30 now. What is the time now? Around 9 now. 9:10 like that I can leave. Okay, beyond that I can't stop the class. So already for some students I dragged by 2 days. Again I can't do. I'm very sorry. 15-20 minutes early I can leave for today. That's all. See here. Array, first of all, everyone, please tell me, can we start with the H model or not? Okay. Formula is there. Okay. That formula has a meaning, derivation, everything. All we are going to understand. Okay. See. Linear growth model or H model. So what is this? Let us try to understand. See. Till now, in all the concepts, whatever we learned in the share valuation, our understanding is like this. See. How is our understanding? There will be a stock. Okay, there will be a stock. That stock will grow at some rate. That stock will grow at some rate. high rate they will grow for first initial 3 years or 4 years. So they will grow at 12% for first 4 years. 1, 2, 3, 4. They will grow at 4%, 12% rate for 4 years. Dividend will grow at 4%. Okay, then what they will tell? Perpetuity it will fall. Okay, perpetuity it will fall to, say for example, 6% till perpetuity. 6% till perpetuity. And how these patterns of pattern of dividends will be understood? Company will grow like this. Okay, company will grow and it will fall like this. So what is the meaning of this growth and fall? And a company will grow and fall. That is not the meaning. Okay, let me explain what is the logic behind doing this way. See, whenever we are going to make a commercial estimate on the cash flows of a company, you can estimate for 1 year, 2 years, 3 years, max 5-6 years. 70 years after, what will happen to the company? How anyone will know? Are you understanding? What will happen to 1-2 years guarantee not there in this economy now. The economy in which we are running today in India or otherwise around in other places, economy is so turbulent that we don't know what will happen tomorrow. You are gauging and projecting for next to 20-30 years means how come it is possible? Therefore, whenever people started doing the share valuation, experts understood that we should not value for so many long years with our estimate. Therefore, they used a technique called as a conservative share pricing. Which pricing? Conservative share pricing. Whatever you are using, Gordon model, Walter model, all these are conservative share pricing models. And do you know what is a conservative share pricing model? Listen. I can sit here and I can see what is there a 1 kilometer away. I can see with much clarity 800 meters away. I can see with much more clarity 600 meters away. I can have much clarity on 400 meters, better clarity on 200, best clarity if it is near to me. I said, what is there 10 kilometers away? I may see, but clarity is missing here. Same way, whenever companies are going on a valuation, they wanted to project the share price. Share price is dependent on dividends. Share price is dependent on dividend. Why? Dividend is the cash flow on the share. What is the value of an asset here? Present value of future cash flows. So to get the value of a building, rental cash flows has to be discounted. To get the value of debenture, interest cash flows has to be discounted. To get the share price, dividend cash flows has to be discounted. Dividend cash flows, dividend cash flows I have to project now. Dividend will grow or will not grow? Will grow. At what rate? Maybe 1 year to first 3-4 years I can gauge the market. I can tell dividends will grow at 12%. Grown at 12%. After that, I don't know what will happen. Okay, after that, 4 years after, what will happen? How do I know today? Therefore, you do one thing. From 5th year beginning until 4th ending till perpetuity, conservatively let us take. Don't take 12%. 12% you can take because you know the market now. So therefore, with confidence, you can give a higher rate of growth. But after 4 years, what will be there? Maybe company may grow beyond that. Company may go down also. So you don't know what will happen after 4 years. Conservatism has to be used. So conservatively, what they said, take a lower rate for the stable period. So that's why all the questions are dependent on these assumptions. First of all, everyone understood this concept clearly. Yeah? I'm talking to you. Understood? Okay. So what they thought, you are taking that growth will increase like this. Okay. And suddenly the growth will fall. No, this is wrong, they said. Who said? Pronunciation, I'm leaving it to you. H model came. Okay. Fuller and Shia, some name. Okay, I can pronounce my name properly, not their names. So these people started one model called as a H model. What they said, you are assuming that first 4 years ki growth will be steeper. From then suddenly it will fall to 6% and it will continue till perpetuity. Like this, fall will not be. Always, whenever fall is there, how growth happened, fall also happens in the same way. There will be a linear fall, not a sudden fall, like what we are assuming in all the other questions done till now. Done till now, what we have done, company will grow at the rate of 10% per annum for the first 5 years. After that, it will fall to 6% thereafter, and suddenly from 10 it will go to 6. Why it will happen like that? Yeah, though you are using conservatism, there should be a logic enough for doing that. Therefore, this person is the first person to understand that when growth is in a constant rate, fall also will be having a constant rate. Means when growth is having a linear relation, fall also will have a linear relation, not a sudden abrupt fall. Clear? Huh? On that footprints, a person started a model called as H model. We will write the complete notes in the next class, but understood the theme of H model clearly, yeah, everyone. Everyone clear up to here? Okay. So what they said means when growth is linear, fall also will be linear. Suddenly no one will fall. Okay. Fall also will have a linear relation. But how that linear relation can be established in a formula? That's how they derived a particular formula called as H model formula. Which model formula? Yeah? H model formula. How that H model formula will work, I will show you before going into that. Okay. First, let us write down the form. Where is it? Let us write down the formula for H model. Somewhere in your notes, you please write down first. I will tell you the logic behind the formula today. Problem solving, analysis on the question, all these things along with May 26 paper, all these we will do in the next class. Okay. Write down. H model formula. H model formula. Okay. H model formula. P naught equal to D0 into 1 plus GL whole divided by KE minus GL plus D0 into H into GS minus GL whole divided by 2, this divided by KE minus GL. First write down this formula. Write down the formula, take time, no problem. If you have written, please let me know, or else how would I know whether you have written or not? You don't sit silent, yeah, all the students in live. If you have completed, let me know you have written, or else I will be waiting for you. Let us see. What is the logic behind this formula? Let me first explain. Till now, what is our thought process? What is our understanding till now in all models? Here it is. It will grow 1, 2, 3, 4, 5. 5 years it will grow. Or technically, ఇది 0 na 1, 2, 3, 4 like that. For 4 years, growth will be 16%. Okay. And what will happen? From 4th year, directly it will go to 7% and run till perpetuity. This is normal dividend models we have seen, correct? But they say like this it will not be, like that it will not be. Okay, so they say it will grow. This is right. 0, 1, 2, 3, 4, correct? Okay, or 5 also. Let us take. I have written line. 5. Now how it will be? G equal to 16%. G equal to 16%. After that, when fall happens, fall also show a linear pattern. Okay, fall also show a linear pattern. How growth is increased to 16, growing by 16 every year, fall also will be in a linear fashion. Why growth will be 16? Suddenly fall will happen. Why that assumption? Therefore, what they said, this period is called as low growth period. This period is called as supernormal growth. What growth here? Supernormal growth. A supernormal growth they represented through GS, supernormal growth. GL, low growth. Low growth. Okay. Now what is their point of view? Listen carefully. One thing is very clear. This low growth period is also called as long-term sustainable growth rate. Enna growth rate here? Long-term sustainable growth rate. Remember that word. Next attempt they may change the names. This is called as a long-term sustainable growth rate. That's the meaning of that word. GL. Long-term sustainable growth rate. And what does it mean? At any point of time, you see, long-term sustainable growth rate is a guaranteed growth. Means GL is a guaranteed rate. You see the company today, you see after 10 years, you see after 50 years, I can challenge and project that this is the minimum growth that I will maintain. Long term, this is a sustainable rate. Okay. How much? 6%, let us say. And at any time you see 6% minimum growth rate we will maintain even after 100 years. Okay. Sir, but how much supernormal growth you can maintain? Okay. How much supernormal growth you can maintain? That I don't know. That can be from 5 years or 6 years like that. Supernormal growth, I can't give a guarantee. But one thing I can tell, our long-term sustainable growth rate is 6%. Means, what is the point here? Price of the share is made up of 2 elements. Number one, price of the share is made up by 2 elements. Number one, price because of long-term sustainable growth, price because of supernormal growth. I repeat again. Price of the share is dependent on 2 elements. Element number one. Price is influenced by long-term sustainable growth. That will be a slow rate, linear rate. Okay, long-term sustainable growth. And it will be influenced also by supernormal growth for some number of years. Okay, now listen carefully. Okay. What is this D0 current dividend? 1 plus GL means what? 1 plus GL means the long-term growth rate. Divided by K minus GL means what? This part if you calculate, you will get the price due to long-term sustainability. And normal all other models, whatever we have done, first we will calculate first 3-4 years, next perpetuity. But here in this question, first we will calculate perpetuity. And perpetuity lo what will be there with you? And long term lo what is there with you? It will be the first formula part. Are you understanding the difference, everyone? Have you understood the difference, everyone? Everyone reply. So, what is the formula? P naught equal to D0 into 1 plus GL whole divided by Ke minus GL. This is first part. Part 1 I will discuss today. Okay. Part 2 and other things I will discuss in the next part of the class. Okay. So, it takes time to understand this model. This is a normal like any other thing. P naught equal to D1 by Ke minus G. D1 equal to D0 into 1 plus G divided by Ke minus G. Same formula. But here we are taking a long-term sustainable growth rate here. First part of the formula, everyone understood clearly? Okay. I want your permission before we do. Shall I continue with the second part of the formula and complete today, or shall I continue in the next class? You tell me. See, I will go by the majority. They said to continue. Some people also said to said as a next class, but more answers I have got from continuation only. But still, no worry. I will re-explain that in the next class again for the new joinees. And again, I will upload this video on YouTube also first 2-3 days. If anyone misses, they will also get the clarity. Sir, anyway, let us continue now. So, price of the share will be made out of two determinants. Okay. Number one will be long-term sustainable price. This will be because of D0 into 1 plus GL whole divided by K minus GL. Okay. And second part of the formula is also there. This is super normal growth price. This is not for 100% n number of years. This is only for some years. Means how they say D0 into H, high growth period, number of years, 10, 5, 6 years, or whatever they give in the question, that we need to write, into GS minus GL divided by 2 whole divided by KE minus GL, okay. Now listen, sir, what is this H into GS minus GL? I did not understand this one. Okay, I will explain. See here. See here once. I will ask you one question. A into B by 2, A by 2 into B. Both answers will be same or different. I will take A as 10, B as 6. Okay, B as 6. A into B by 2, A by 2 into B. Both answers will be same or different. See, some people will now put numbers and do. Okay, some people definitely they might have done that. Okay, I will see. I will show you. A is 10, B is 6 na. 10 into B 6 by 2. 10 into 3 30. Okay, va? Next is A into B by 2. A by 2 into B. A by 2 into B. 5 into 6 30. Both answers are same. You can now believe me. Hey, I am talking to you. Okay. See, why I am saying this na? Listen, there is a reason for this. This part of the formula. Okay. CA Institute answers la ICA RTP answer recent suggested answer. Suggested answers are released in the May 26 suggested answer. If you see there, they have given a different answer. This formula they did not use. It is actually taken from the origin. CFA materials have taken this formula because H model is there, very popular there. So from there I have taken. So this is the formula actually given there. D0 into H into GS by GS minus GL divided by 2 whole divided by KE minus GL. This is the formula there. Do you know how Institute has given the second part? This part Institute and we are same. This is also same, but small difference. D0 into H by 2 into GS minus GL whole divided by KE minus GL. Like this, our Institute has done. That's why I said A into B by 2 or A by 2 into B, answer will be same. That's why I'm telling you before we start. Clear? So the only difference is we used D0 into H into GS minus GL whole divided by 2. But Institute has done D0 into H by 2 into GS minus GL directly. Anyway, answer will be same na. So, but I will really tell the way Institute has done the answer is not right. Answer correct, formula correct, but formula placement is wrong. That's why I don't follow that. I will tell like this in exam, if you want you write H by 2, but I can't promote a wrong answer because that way of doing is not appreciable. Shall I tell you the reason why? Look at the formula derivation. Then you will also tell, yes, we are right. See, first part of the formula we know. Second part of the formula is what? D into H into GS minus GL whole divided by 2 whole divided by KE minus GL. KE minus GL anyway we need not calculate now. So let us see, okay, this part. What they said, na? In the first part of the formula, what we have considered? D0 into 1 plus GL whole divided by KE minus GL. Considered and a complete growth of a company in two parts we divided. High growth and sustainable growth. High growth and sustainable. Supernormal growth is made up of two elements. Supernormal growth is made up of two elements. For example, I said 16% supernormal growth for first 4 years. Later it will drop slowly to 10%, I said. Okay, to 10% I said. But 10% will not go suddenly. Slowly steep fall will be there. Okay, there will be a fall. Linear fall will be there. Now listen. What they said, na? Arey, price of the share is made up of two elements. Sustainable growth, supernormal growth. Correct? Listen. 16% is what? Supernormal growth. I'm asking question to all of you live. 16% is supernormal growth. Long-term sustainable growth. Yes, Yella. Supernormal growth aithe write down answer yes. Long-term sustainable aithe write down L. What it is? First you need to understand all this to do H model. Yes, L 16. Answer is wrong. It is both S and L. L is always there. Here you goes wrong. That's why you don't understand the formula. It's both. Everyone is wrong. Only one person is right. Valarmati. Yes, perfect. Super. Remaining all are wrong. It is both. It is both. Do you know what is the reason? 16% la 6%, 10% already long-term growth rate is there. Supernormal growth rate plus that extra 6% flavor will get added. Are you understanding? So supernormal growth period plus 16% means what? Already long-term sustainable growth rate of 10% my company has. Extra 6% will come for the first 4-5 years. After that, linearly it will fall and stably stays at 10% long-term sustainable growth rate. And what you have to understand, see, 16% long-term sustainable growth rate is there, and additional supernormal is also there. And normal is 10, supernormal is extra 6. And I already valued one part of the share using long-term, and 10% I already used and valued. Again, you should not take 16 here. That's why I will take the differential only. I will not take GS directly. I will take GS minus GL because to the extent of GL, already we have computed in the first part of the formula. So we need to consider only that extra flavor added because of that supernormal period. Are you understanding? H means supernormal high growth period. High growth period should be multiplied with only the high growth part. Because sustainable growth rate part already we computed in the first part of the formula. Everyone understood? Everyone understood? So part 1 of the formula, what we have taken, D0 into 1 plus GL whole divided by KE minus GL. This considered growth. Which growth? From today till infinite years, this growth will be there. But for the first 5 years or 10 years, so there will be high growth. That I have to add. That into H. How many years it will be? Into GS. Total supernormal growth. But in the supernormal growth, already sustainable part is there. Reduce that because already we calculated value for that. Divided by 2. Whole divided by KE minus GL is common. Okay. Now doubt. Sir, that is okay. Why they have taken divided by 2? Why they have taken divided by 2? Yeah? Why? Listen, there is a reason for that. Okay, there is a good reason for that. That's why, since there is a reason for dividing by 2 here, I don't encourage dividing by 2 here, though answer is same. Are you understanding? Since when they brought this model, H model, they have some intention in their mind. GS minus GL divided by 2A correct. Sir, D0 into H by 2, D0 into H by 2 into GS minus GL GS H by 2 into GS minus GL also gives the same answer, na sir. In that case, shall I tell you another thing? D0 by 2 also will give the same answer then. D0 by 2 into H into, and just because answer is coming, you will put by 2 any place you want, without understanding the logic behind the concept. Listen, what is the logic? See, company will grow 16% super growth rate is growing, and 10% stable is there, 6% supernormal extra is there. With all these, 16% it grew. Later what they said, 16% won't go to 10% all of a sudden. 16% will go to 14. 14 will go to 13, or like this I can tell. 16 will go to 15. 15 to 14. 14 to 13. 13 to 12. 12 to 11. Then it will fall to 10. Then it will fall to 10. If you tell supernormal growth is 16%, okay, 16% minus 10%, na? Okay, 6% will be the answer. 6% will be the answer. But it is not right. The reason is, I am not falling from 16 to 10% on one single day. It happens over a period of 5-6 years. And if you ask me the answer in the end of at the third year, I will tell 14%. If you ask me today, I will tell 16. If you ask after 5 years, I will tell 10. Therefore, I won't take highest one or lowest one. I will take the average. So that's why they have taken GS minus GL divided by 2. It should not be H by 2. D0 into H. D0 means existing dividend. High growth period is how many years? Okay, how many years? And GS minus GL divided by 2 na, directly from high growth of 16 to 10, one daylight is not falling. It is falling over a period of time. At one point, if you see, it will be running in 14. One point, if you see, it will be 12. One point, if you see, it will be 15. So I want an average. I don't want extremely high or extremely low. I want an average. So therefore, they have taken GS as 16, GL as a 10, whole divided by 2. This is the formula. High growth period into D0 divided by K minus GL is for the discounting. Finally, you will get the price of the share using H model. Now see the question. We are not going to doing in the next class. You are valuing the stock. Relevant inputs. Current dividend 1 T0. Dividend growth rate 29.28%. Okay. Super normal. Declining linearly over 16-year period to a final and perpetual growth of 7.2. And 16 won't go to 7.26 in 1 year. Linearly it will fall. For that, how to do, we will see. Risk-free rate, all these will be calculated. Then finally is asking, use a linear declining growth model under H model to value the stock. Okay. With this data, how to do, we will see. And next we will be doing question number 14, question number 15, question number 16. All kinds of questions on H model we will complete. Make ourselves perfect in understanding. Formula derivation, one more time I will repeat in the tomorrow's class if you do not understand. Already the time is 9:30. Okay. Next class we will continue with the remaining parts. Okay. First of all, everyone give a reply. Do you understand all the discussions we made in the today's class? Everyone? Okay. Yeah. So next class we will do problems on H model, and we will be going on problems on rights issue, bonus issue, buyback, and some other extra miscellaneous questions on share valuation. Okay. Okay. Thank you very much. Thank you. We'll meet again in the tomorrow's class.